Welcome back to another episode of the Technical Roundup podcast. Joining us today is one of crypto Twitter's most beloved cats, as well as traders, CL, and of course, my colleague, co-host, even at times friend, Donald is here as well. Gentlemen, thanks for making the time. How's everyone doing?
Good. I mean, it's a little bit cold. We've kind of gone a huge cold front, but dealing with it. So yeah, it's fine.
CL, thanks for joining us. You good?
Yeah, sorry. I'm very good.
Awesome. Well, this is interestingly enough our first, pseudonymous or anonymous guest, which is maybe weird for traditional finance, which is something we'll come on to as well. But for crypto, it's pretty normal. I don't know if you've listened to our other episodes, but we like to almost segue away from the, how did you get into crypto type of questions? Because they just tend to be pretty boring and or generic. So we'll kind of get to the start of your trading career to some extent, or at least the notable parts of it. So it for a lot of people were forged in the flames, so to speak. The March crash. I don't think anyone's ever going to forget that. And in your case, if I understand correctly, you were working at a crypto hedge fund at the time, and were trading there before the crash happened and on the crash as well. Do you want to give us some background or context, or what it means or how it was to be trading at a hedge fund around that time? What were you doing? How did that form your, how you trade and look at the markets in the future? Just any kind of background and how that formed your career would be really cool, I think, for our audience.
Sure. I think that was last year. And I got into this hedge fund in 2019, end of 2019, or like Q3, Q4, and I think by then most people were just starting to figure out what does it mean if the market is like trading in super high premiums, because that was the beginning of when everyone's kind of started figuring out this consistent pattern where it's prolonged periods of contango, or traders paying stupid amounts of intraday funding is probably not a good thing. And so we were just kind of trading that, and I think most people kind of figured it out and started trading that. And in February, I think the market got super leveraged. I think most people realized too, but so there were still probably a lot of traders that thought being X2 longs, I'm super low risk, or some arbitrage firm might be arbitraging stuff on leverage, we just nuked 30%. I might buy on BitMEX because it's trading $100 below, but they perform the trade on leverage, or stuff like that. So on the day where we actually started moving down 50%, just all these positions, and we're in a lot of vulnerable spot, because they couldn't get their collateral and they couldn't deposit because the blockchain was filled up. So it was just a bad day for a lot of people that underestimated the downside convexity of just having Bitcoin itself as collateral.
Yeah, that's actually one of the themes we discussed with a couple of other of the futures traders we've had on. For the benefit of our audience, do you want to explain that real quick, or go into the dynamics? So, conventionally, if you have inverse futures, it's almost more of a kind of USD BTC pair, right? Where your margin and P&L is posted in Bitcoin. But if you're long that contract and you're losing on the position, you also become less collateralized for that position the more wrong you are on the position, right? I mean, the short side benefits from that because, your notional size increases as the market moves in your favor. But on the long side, if Bitcoin's your collateral and you're long, price goes against you, the position loses, and also the actual collateral you have for that position decreases as you get more wrong. And
Right.
this kind of brings us to the BitMEX glory days, where the whole market was just kind of long its longs in a quite literal sense. And so when Bitcoin would get poked, that would have a much larger effect in terms of liquidation cascades. But broadly speaking, when you talk about convexity on inverse futures, is that broadly correct, the short description I gave there? Do you have any further nuance you'd like to share, and maybe how things are different now?
Sure. Yeah, like you described it perfectly, right? And I guess the only difference now is ever since March, we had massive. Maybe it's just like there used to be like this consistent trader base on BitMEX, 4B, and OKX, and like these were like very, very huge exchanges for these Bitcoin collateralized exchange where like just traded long Bitcoin with more Bitcoin, which is like super toxic because like if you think about it, like okay, like we have billions of dollars like using Bitcoin to buy more Bitcoin. Like that just doesn't sound right? Like I was so tilted because like I was like always like long-term bullish, but like every time like before March, like we get into a spot where it's like market is leverage, and I just look at it and like, dude, how's this thing ever gonna pump if like everyone's like longing Bitcoin this Bitcoin? Like it just doesn't like it just didn't make sense because like any whale is just incentivized to sell it down because they make way more money doing that, right? So it's like I was just like, is this thing like just gonna permanently be like a gambling asset or like? But then March happened, like, and so many of these people got wiped. And after that, like the open interest in on like these 4B BitMEX and like OKX exchanges just never kind of like recovered, and their share of total trading has just like gone down. And like on the bright side, like and even better, like the tether margin futures started growing so fast because everyone's like, oh yeah, like if you long Bitcoin with Bitcoin, you're gonna be screwed. Like so now I'm gonna move over to tether and like because I'm a stable coin maximalist, like I need to be hedged, like it's just stuff like that, right? So like everyone, not everyone, like just a lot of people moved up to Binance futures because they were kind of the most liquid tether futures. So what happened later was like, oh, market started recovering, and like these people kind of like didn't own any Bitcoin because their collateral is now tether, and like, and that if that's the case, like shorts get hurt more than longs because like that's just how it worked mathematically. So it became the opposite of like inverse futures. So it's like it's always better to like hurt the shorts on Binance futures and go for the longs.
That's actually true. I mean, I enjoy the trading environment much more nowadays too, just because of you could call it systemic risk, right? At that point, when you have like a bunch of people just long with Bitcoin, and then the moment it starts going, it really, really goes to shit. How did you do during the March crash? Did you actually like get fucked along most others, or did you make out like a bandit?
I mean, I survived, so that's good. And the place I was working at kind of survived, but they decided to close down operations, and it was like I actually hedged on my FTX account, but not on my BitMEX account. So I didn't do well on my BitMEX account. But yeah, it was just a kind of a bad day overall because like even if you were like short, like it was just not a good day because then like you just know like okay, this is like a massive down move. Like the market is probably not gonna like recover for a month. It's gonna be like consolidating, that's what it did for months. So I was just kind of like, damn, like this, like yeah, it's gonna be so boring for the next few months. You're just gonna be scalping like intraday bullshit. It's like gonna be, and nothing's gonna like exciting's gonna be going on because like everyone's like just gonna be in a bad mood. So.
Yeah, I still remember like sitting there being like, ah, shit. This is like I wasn't exposed to the market. I was pretty well hedged, but I was still sitting there being like, oh shit, is this going down? Is this going to go like be the end of it all? And I mean, no matter how long you've been in the market, right? That question creeps up when you go down like 50% in a day on Bitcoin.
Right.
But-
And like a move that sharp kind of like almost never happened before, or like I guess like no one just. I remember like all these chats we were like everyone was in. Everyone pulls up the daily trend. They're like, "What the heck is this candle? Like, this is not even real, right?" Like, so yeah.
When did things start turning around from a high time frame perspective? Because I remember for me personally, like that nuke happened, and I was like, "Well, shit. I mean, this isn't where you sell." And I was buying some down there, but with the expectation of playing some sort of bounce or God knows what. And I actually didn't trade that well between like basically since from the bottom to when price basically retested something. I think it was like 7,600 or like mid 7K. Once we got through that area, I kind of got my bull goggles back on. Like, okay, we're starting to rebuild something, reclaim something. These rallies aren't being sold into, etc., etc. And the higher time frame picture, at the very least, it looked like we were going to survive, right? When did that moment in the market come for you, if at all? When you said, okay, now that I'm looking at that March day, with a few weeks or months past, that really does look like a generational bottom or like a significant market bottom, and now I actually think the upside is wide open. Was there anything specific or anything either technical, fundamental, that brought that turning point in your mind from crash, okay, let's see if we survive this bounce, versus, hey, this is starting to look pretty decent and almost safe at this point?
Yeah, probably like when we got into April, like early April, I was like, like all these bad news, like it kind of just stopped working, right? Like it's like, okay, we get some bad news, like, oh, stock market is down, like we need to be correlated to it, so let's start selling. Like, but I kind of just realized like there's limited number of bears in this market, right? Like if you're bear crypto, like you either just never touch crypto, or you come in and you're a trader that kind of shorts it, right? So like I just figured like if you're already bearish, like you're kind of already either like no new bears is gonna come in just to short this, right? Like they don't even want to touch like all this stuff, right? So like I just figured like like the number of bears are limited. So like every time we went down a bit, it was just like from all the shorts that were already in the market. So like every time we moved down like 5-10% back then, it was just like all the shorts piling in, and that was just like super alpha, because like you can kind of like count like how many bears there were in the market, because like there was like limited number of people that was still interested in trading this and like everything. So
yeah.
So and I realized like like there's like no like real like spot like whale still like capitulating hard. Like it was just like traders like smashing around in a tight range, like 5, 6, 7K. And then like I also realized like, damn, like this is the first time ever where Coinbase is consistently doing a positive net CBD of like 2,000-3,000 Bitcoin every day. And that happens starting from the crash, right? Like every day we just get net buying of 2,000-3,000, sometimes 4,000 Bitcoins per day. And that was like a consistent thing for like the next whole month. And I was like, damn, like, is this what real buying interest looks like? Like, because like that's never happened before. So
yeah, it was insane. I mean, it makes sense, right? If you think about it, being bearish on something, it's pretty bad to be trading something that you're bearish on, right? Because I mean, the upside is always larger than the downside, right? Like if you just think about it, Bitcoin going from 4 to 60K is much, much more significant than Bitcoin for bear anyway, than Bitcoin going from 4K to 0, right? I mean, yeah, you can short this and you can reshort and reshort and reshort, but still, like the upside of like being bullish in a bull market is much greater, I think, than being bearish in a bear market.
right. And also for the turning point, like I've always been like a shorter time frame trader, like just intraday, week, stuff like that. So like I remember right after 3,500 or something that we went to on futures, like Coinbase just had like this reverse like rug pull where it's like it was like the most amount of Bitcoin buying I think I've almost ever seen in a short amount of period of time. Like it was just like I don't know who it was, but it was just like a ridiculous amount of buying, and I was like, okay, like this has to be it. Like after 3,200, like that, like there was like very fast momentum back to like 5K, and I was like, okay, like, this has to, like we're not, at least we're not going to zero today, right? Like that's what I was thinking. So
Yeah, even that seems like a gift at certain points in the market. Like, not zero today is a pretty good start after getting through a
Right.
50% daily candle. But you mentioned
Right.
some lower time frame trading and some data points you look at earlier to get a sense of when you were trading for the fund, like futures data, etc. Something we like to ask all of our guests is when they wake up and they want to get a sense of the market at a glance, what is some of the stuff that they look at in terms of either charts, data, or anything else to just gain an understanding of what's going on? So for you, as someone who's often, or at least experienced in the short-term trading side, what does a normal kind of wake-up daily routine look like? Do you just look at charts, premiums, funding? Could you give us a kind of overview of your toolkit?
yeah, so like yeah, what you just said, and I tend to pay attention to just the chart too, because like there's always like spots where you know like people are gonna set stop losses, even like if they're a scalper too, like because like from my understanding, this market is like a ton of just like 1 minute, 5 minute, 15 minute chart traders battling each other to like kind of like and then like the actual demand throughout that day kind of like ultimately like that direction ultimately get printed out as these lower time frame traders kind of like try to do price discovery fight between themselves over like testing of like just who's actually buying and selling there. So like there's always gonna there's just like intraday high and lows where like people set stop losses, and I would just go and see like, oh, how many people are like getting stopped out here or there, just kind of like to gauge like how much of the intraday like movement was like held up by like a directional bias between these people to like gauge like, oh, like what's like how much what was going on, and like and or yeah like checking some altcoin indexes, because I think that's important, because like a lot of intraday moves could not just be derived from Bitcoin itself. Sometimes you could see like if there's like a big price sell off, then like ETH would kind of like start bending down, and then like BTC is correlated to like all these coins, so it's like Bitcoin can start going down. So like I kind of just like take a look at like all the charts and like see if there's like leverage going in and out like significantly.
Do you think in general that whenever you have like too much leverage, you get like a sell-off or like a squeeze, or do you think you can have healthy leverage in the market?
I think we're kind of seeing some extent of healthy leverage like this entire run. I mean, of course, there's like points where it just gets like, okay, this is kind of done now, but like we've never really had like anything close to like backwardation. So like every bottom so far was kind of like healthy leverage, I would say. Yeah.
Yeah, I agree. I mean, we've seen so much. I mean, if you just compare it to like the 6 to like whatever 10K range in 18, where we had like so much leverage every time it just went up or down, like it feels much more muted now. But maybe that's because, like we talked about earlier, because of the difference between having Bitcoin as collateral. But I definitely agree with you there that it's just been much more constructive on that front.
Right. Actually, like over the last few months, I would say there's a tiny shift back to Bitcoin collateral, but it's not like as like just it's not like 2019. Like 2019 was just literally only like Bitcoin collateral futures, which is just horrible. But now it's kind of like there is this mix, and like during like 2020, especially like after March, it was just very low amounts of like Bitcoin collateral futures, and I was posting about that a lot. I was like, guys, like this whole rally so far is just like open interest from like the stablecoin futures, right? So like that's like real cash buying Bitcoin. Like even if they're long, that's real cash, right? Like they can't get Bitcoin exposure unless they take the positions. So this open interest can like you can almost gauge that as like a spot buy because like they need to be X1 long at least to even get X1 Bitcoin exposure. So like I think a lot of people underestimated how underexposed the market was. And now that Bitcoin price is way higher and like it kind of outstripped the amount of stablecoin there is. So like there is a bit of moving back to BTC collateral, but it's still fun, I think. Yeah.
Do you think that that there'll be some people listening who are new to this market, and maybe they're on Twitter and they're seeing huge like Binance futures, P&Ls, and all the usual stuff that comes with these prices and this sort of price action. Do you think that you need leverage to make it? Can it be used appropriately by beginners? Because I think when spot is moving so much, if you're in the right investments, it does a lot of the heavy lifting for you. And leverage is like one of the few ways to get liquidated while still being right in many cases. Are those people using leverage, are they not going to make it?
It's a hard question, right? Because it depends where your entry is, of course. But like the way I see it is like, if you find a consistent way of making money in crypto, like I think you just keep doing it because like, why wouldn't you do that and like try something neat, right? Like for me, it was like okay, I didn't like altcoins in 2019, so and that's where I started like getting to trading more seriously, and I just thought, yeah, like trading Bitcoin made way more sense for me, but I know there is also like of course a lot of people that wasn't into like this whole like, oh I'm coming into like this BitMEX casino to like I'll trade everyone to make money. They just like did investment in like other alts that are now like up probably more than me trading Bitcoin, right? So yeah, I think like you just figure out what you're good at and kind of do that.
Yeah. Do you have you moved on from that like Bitcoin centric trading style, or do you still concentrate mostly on Bitcoin and just do a little bit of everything else?
No, I've kind of. I mean, I still do trade it, but like I've moved on a lot. I used to like completely be like, oh, wake up and just like rest 90% of my day would just be literally looking at every trader it was kind of ridiculous because like in 2019 there's not that many people in this like space yet, so like every day I would just like look at the orders coming in and I would just be like, oh yeah, it's that guy again. It was just like I kind of almost knew everyone like because I would just like stare at this whole thing every day and like read the tape every day. So it's like, but now it's like it's impossible for me to like reach that level of like granular level because like there's just way more traders and there's actually like significant spot influence now, which like kind of like less of a thing back then. Like back in the like 2019, if you get like a few mil buy on spot, people were like, oh shit, like damn, there's like real buyers, like wow. but now it's like yeah, these like strong flows come from spot too, so it's like it's no longer just like, oh, I'm gambling against like these other 100 people in BitMEX. So it definitely changed. I mean, yeah, this asset has gone like X10, X5, right? So yeah, the structure of the market definitely has changed. So I've now started doing more alts and like some small investments with like eGirl capital and stuff.
Yeah, I wanted to take us take us on the journey from transitioning essentially from the very short term, I know everyone at the poker table, Bitcoin, low time frame speculation, to being much more thesis oriented, investment driven type of approach, both in your kind of personal endeavors, but also via eGirl Capital. How do you make that transition? Were you always kind of interested in the fundamentals, but then knew that your edge was in the lower time frame trading, or was it a more transformative thing, right? Like, okay, I'm going to get away from the short time frame, technicals, futures, liquidations, etc., and it's almost time to retrain myself to think about the market in a different lens. How do you kind of go from A to B? Because for many people, that's like probably the biggest jump that they can envisage. You know, if they're trading like short-term technicals, medium-term technicals, whatever, a lot of the time they'll almost write themselves off as not knowing the fundamentals or not being an FA type of guy. So how do you go from point A to point B or become comfortable with looking at the non-technical side of things?
Right. I guess I always kind of like was interested, but I would never like be like put my money on it because like I knew like I would just always assume like, yeah, this thing's gonna take too long to play out. Like there's no way I'm like gonna be in front of my computer just waiting for this thing to play out over the years, because like like what am I doing really, like if I was an investor, like there's not much I can do like intraday or intra-week, right? Like so I just naturally pivoted to like Bitcoin trading, but I still like read about like the other stuff. Like I wouldn't say like very consistently, but like yeah, I do keep myself up to date, which is why like I realized like, oh shit, I missed like the first move in DeFi like 2020, but like I immediately jumped in afterwards because I was like, yeah, like the first time I used like I tried to lend out my money was in like 2019, and I was like, yeah, this has to be the future one day. But like I didn't really buy any of these tokens, right? Because like I kind of like have this like belief where like, yeah, fundamentals are like in no way correlated to price, at least like not like next week, next month. It's more like a multi-month or year thing. So I just never actually invested, right? It's kind of hard to like for me to think, oh, if I'm good or I'm like a good investor now, or I don't think so. Like, or I don't know, right? Like this thing, like, oh, you invest in something, like, okay, cool, your unlock is next year, like, what's the price gonna be by then? I have no clue, right? Like, or like, it's kind of like to me, like I can see if I'm wrong or right if I'm doing like my shorter term time frame strategies, but it's hard for me to like gauge like, oh, am I right in this investment at the moment, or like because it takes so long to play out. So
would you say it's more of like a patience issue, or is it something else? Because for me, I've always been like, I don't have a problem like sitting on my hands for a month, but like if it takes longer than that, it starts getting like difficult to still have conviction, to still be like, okay, this is still going my way. Do you think that's the issue, or do you have like, is there another reason for it?
Yeah, that was definitely one of the issues. But back then, right, like because like I didn't have as much capital, so it didn't make sense for me to be like, oh, I'm allocating all of this to like these investments or something like that. Because like, what else am I gonna do like in my daily like life if I'm in crypto and I'm already like fully invested? There's like you kind of just become like DJ Spartan. You have nothing to do other than ship post, because like he's well capitalized, like but I wasn't back in the day, so it just didn't make sense for me to go that route. But now I see why, because like I like I'm starting to kind of get burned out, like just trading like BTC, because like now it's like I have to keep to do what I used to do before. It's like I need to like pay way more attention, kind of, because there's just way more random order flow coming through, unlike before where it's like, oh damn, someone long 5 mil BitMEX, and that's that's the biggest long we've ever seen like the last 12 hours or something like that, right? Like yeah, back in the days, like someone would like take a position and like everyone would see, right? Like, oh, he's long like 5 mil, like damn, what a market buy, damn, I mean, what a chat, like like. But now it's like, yeah, this 5 mil happens like every 2 minutes, so it's just harder, and so I kind of moved on.
Yeah, I've noticed that point made by a lot of tape readers or order flow traders that you know used to just be able to follow pretty much MEX flow and have a kind of all in one place arrangement for your short term trading, whereas now you've got all sorts of weird data coming out from different exchanges. You need to follow spot, need to follow futures as well. It's it's a whole different ball game. So it's unsurprising that the time commitment required is also different. So the transition makes sense, and one of the most interesting projects that came up on my radar, and I'm sure this applies to our listeners as well, was actually eGirl Capital. because first of all, the name was just hilarious, so there's always that. But secondly, I wasn't entirely sure what to think. Like, is it some sort of unofficial alliance? Is it an actual fund? Who's in it? What do they invest in? Are they registered, regulated? Like all of that sort of stuff. But then over the last, I don't know, couple of months, eGirl Capital has been making moves. We've seen you as investors alongside Alameda, CMS on some, higher profile tickets. You're in the DeFi Alliance, which Coinbase recently joined. So that's a bit of a bit of an interesting overlap. And as far as I'm aware, I think the majority of eGirl Capital is like anonymous as well, right? So it's a pretty uniquely structured type of team. I mean, crypto funds are obviously different from traditional finance funds, but they generally still kind of adhere to the same old structure where you have some sort of legal incorporation, everyone knows who the other people are, and, ticks some of the normal boxes that people may be used to. But eGirl Capital is pretty different in that regard. Could you give us a bit of an overview of how the idea came about? What do you do? Do you have an investment mandate? And yeah, I'm sure we can branch off from there once we get a bit of an intro.
Sure. So it's kind of just this joke, right? Oh, what if you saw this firm like investing in a project that like if you scroll down into like this project's website and you saw this ridiculous name, what would you do? Like, and then everyone's like was replying, yeah, like I would 800%, like my net worth, sell my house, like just go all in. Like, but that was like mostly like just memes on Twitter. But we kind of like just like a few people replied in the post. Somewhat along the lines like, oh yeah, let's make it, like let's do it, and then like few people came in and like, they're like, yeah, let's do it, I'm down to join, and then I was like, cool, I'm in, like, and then this group chat kind of just formed, and at first it was mostly just like friend posting, like shit posting, like meme posting just in the chat, but like later, like one day, like someone went and like made this actual entity in BDI, and we're like, damn, that's really cool. So now I guess we can, that's like a legal entity, so we can start investing in things. And I think our first thing was like, the first thing we invested in was, I think, Radical. There's like this code base. Actually, I'm not super familiar with it, but it's like kind of like a decentralized GitHub sort of thing, and that did really well. So we were like, damn. I mean, yeah. So like we were like, yeah. Do we like make more investments? So like we kept going, and like, so now it's kind of like became this thing, and like so it kind of just like happened naturally. Like I didn't even think it was gonna work, and I actually didn't even like buy into Radical because like I just didn't like, I was like kind of like burned out at that time, so I was like, yeah, like I'm just not gonna do anything crypto, so I kind of like didn't participate as much. But now I'm like, okay, yeah, this thing's like much more serious, so like I'm starting to contribute way more. And I guess like for the first position was actually stocks, but that was kind of like a joke. But since it did so well, I guess it's serious now. So
yeah. What's all like? Where is it now? Unistocks. What's the price?
I can check, but I think it's like 90,000. It's been around the same price for a while now, like around 90 or 100,000.
But you guys got in like, was it 3 or 4 figures?
Oh no, it was at between 3 and 6,000 for a long time. Where and we kind of just like, I just kind of like accumulated a bunch, mostly because I was like, well, at that time I thought it was like a Veblen good, but then I kind of realized it could kind of be like this, a piece of like history, because it kind of was like one of the first, kind of like, the first like collectible that happened in DeFi. So like now we were like, okay, now that like digital collectibles or like digital art is like the hype, so I don't think we're gonna sell this, because like I think the vision's kind of like changed, and like people actually like believe in this, and the crypto culture is kind of like going mainstream. So, and we actually like bought some more stuff too. Like we're getting into art, and like we got some punks luckily before the Christie's announcement, so that was like super lucky for us. Yeah.
So you're moving in the NFT space. You're moving in a bunch of different like DeFi in the DeFi space. Is there anything that you're looking at currently that other people could get in on as well, or is it just the good old kind of stuff? Or can you not talk about it?
I guess like one suggestion I would give is like for getting into like NFTs, that you just really need to relax and like because like I'm definitely not in this thing for like a flip or something like that. Because like, well, at first I was like, oh yeah, if uni stocks hit something like 50 grand, like yeah, why would I still hold the scam? Like, but now I'm like, wait, the thesis is now changed. Like, punks is like this like ETH culture thing, like, and like all the it's like the first like on-chain NFT. Like, so it like if crypto was like community continue to grow, like these digital traces of what is of its history is going to be very valuable. So I think it's kind of like a very long-term position that we're kind of initiating.
I wanted to ask about how you view NFTs more broadly. So I've seen you argue that there's going to be a very almost kind of extreme value accrual, whereby a lot of them will go to zero, and then others will just, these pieces of history or whatever they may be, will go beyond people's expectations. It's not really a binary articulation per se, but I really found your contextualization pretty interesting, where everyone seemed to, or there seemed to be a prevailing consensus of this rising NFT tide lifts all boats. But if I've understood your position correctly, you think that value accrual will tighten up and the rest will kind of fall off the wayside and go through their own bear market in a sense. Could you add some more context to that? Where do you see, well, first of all, why NFTs? I suppose the second one is, where do you see that value accruing if most are going to have a bit of a rough time, at least to where they are now or at the time of recording?
Sure. So like, I think NFTs is best. Like if I have to give an analogy, it would be like buying a skin in a game. Like there's like many CS:GO skins, for example, that's sold for like 6 figures, 5 figures easily, right? And it's like, imagine if the game was just like the internet and the skins were just like scarce pieces of the internet, and that's how I see it, kind of. And I guess like the reason why most NFTs would, or maybe not zero, but like they would just trade at very low like base prices, like, is because like the amount of artists in the world is like, there is so many, right? Like I think people kind of underestimate like how many artists and like how many like creators there are. So like maybe the first time they see like something they like, they're like, damn, I have to buy this. But then they realize, like, wait, there's literally 1,000 artists online I can reach out to right now that can reproduce something very similar to what I just bought. So like, then why are you buying it, right? Like, they can just like make it like another one next week or next month, or another person can make it next week. So it's like, I kind of feel like people don't realize like this kind of inflation can just like is very high. So and on like projects like alternative punks, right? It's like kind of like altcoins, but like what's the value in like say if you see punks as an analogy to like the first lineup ever made by Apple, which now kind of like all these first Apple computer stuff were really high. But then if you're like buying a 2003 like Mac or something, which is like kind of like not even old, right? It's just like an alternative. Like why would collectors be looking at that and not at like the first Apple computer? It's just like kind of like an analogy, right? So like, and like anyone can create these like alternative punks, right? Like you see all these like random ones, and like, but obviously the original like one that was like the first made in 2017, like the first on-chain NFT, was the one that went to Christie's. Like there's a reason in that, right? Like people, like collectors don't value copies, I would say, or like they don't value things that can be reproduced easily. They very much value like something that's actually in the history, or it's like super scarce, I would say. And among collectors, like they are like these people would have like high conviction and like high value perception for these things. So these people would like pour a lot of money into this thing that they think is like unique or like a piece of history, and they wouldn't like go anywhere to buy these like alternative like copies, I think.
Yeah, that makes a lot of sense. And generally with art, there's something to be said for the added value of truth, right? There's a reason people travel to see the Mona Lisa itself, for example, because they know it's the one, as opposed to replicas or viewing it online, whatever it may be. One of the interesting pillars of your thesis to some extent, and this is something you fleshed out over Twitter, is a kind of macro directional shift, which can essentially be summarized as bearish physical and more bullish digital for many reasons, right? And I think you touched on the central point there to some extent with your analogy of, CSGO skins have this value. Now imagine that being applicable to the internet as a whole, right? Now, understandably, the immediate counter-argument or point of skepticism to that position would be that we're in quite unique circumstances. And I know that's like the most cliched phrase ever in like 2021 podcast world. But basically, everyone's been inside for like a year. We've been confined to the digital in many ways, and so on. And as well, on top of that, there's a crypto boom going on, which brings even more interest towards, the Ethereum ecosystem, but all things digital, generally speaking. So I suppose the lowest hanging fruit counter argument is that what we're seeing right now is pretty much the extreme of what we're going to get. It's as good as it gets, right? The perfect storm, the perfect petri dish, where the real world is closed, crypto's booming, valuations are high, all the attention is there. But then when, lockdowns start to be lifted and some sense of normalcy returns to the world, and maybe even if crypto pulls back or whatever, basically some sort of mean reversion in the real world, that a lot of people will move away from those sorts of digital allocations, and some sort of balance will be restored, and physical goods will maybe reestablish some of their prestige, etc., etc. How much of the current NFT boom do you attribute to COVID circumstances, essentially? And do you think the world opening up, so to speak, is any threat to those pro-digital type of narratives? And I hope that makes sense as a question.
Yeah, that's an amazing question. And personally, I think like this kind of thing, where like COVID being the catalyst, like it was kind of inevitable, because like my other thesis was since everyone, so like internet kind of got popular between like I would say 1995 and 2005, like that kind of 10 years is where we onboarded the most amount of humans percentage wise onto the net, right? And these people started like having computers, phones, and if you see who are the adults today, the younger adults are exactly of that period. So I grew up, I guess not when I was like 5, but when I was like 10, I was definitely on my computer, like, or maybe not every day, but like very frequently, right? And like I see it's mostly the same for anyone that's like 20s, 30s, maybe not late 30s, but yeah, like generally, like I would say like and this is like the population group, like age group that kind of is now starting to gain a lot of wealth in this world, and that will only continue to be the case because at least statistically, like most of the wealth is in the hands of people who are in their 30s, 40s, 50s. So as like this generation of like just purely digital native generations keep moving forward into like being the majority wealth holders of the planet, I think there would be way more of these people that value like digital scarcity and like just digital collectibles more than some other kind of thing they might have obtained. Say it's like a Rolex or something. Like
Yeah,
like I have a friend who's like, yeah, why would I buy a Rolex, go outside for like 2 hours so like people can see my wrist for 2 hours when I could have like bought a punk set as my profile picture, and I'll be flexing 24/7, right? Like, so that's like another counter argument for like as these people like kind of grow up and they start to accumulate wealth, they are gonna spend it on like digital things. And like actually even before COVID, like if you look at the data for how many hours we spend online on average, it's like our entire population, it's only gone up every single year. So it's kind of like we're literally like as a society like just gonna be using our devices more and more. So it kind of makes sense that we start also spending our wealth in this medium, because like I think majority of the world still spends their money on like the physical medium rather than digital medium.
Yeah. With regards to spending your wealth, let's say someone new comes into the space, sees Bitcoin is like at 60K, sees all these altcoin valuations that have gone through the roof. Do you think, like, what do you think is the best opportunity out there right now to like get involved, kind of start feeling the market, or even like if you've been around for a while, like where should you be looking?
For making highest amount of return?
Yes.
Or even just kind of macro-wise, right? Let's say like a young kid listens to this, sort of 16, 17 years old, about as digital native as it gets, understands the whole premise of being on the internet, digital goods, can see the opportunity in crypto, maybe has tried lending a bit and messing around with the infrastructure and tools available, but just wants to have that kind of, okay, if I'm early, what's the best way to take advantage of the fact that I'm still early in relative terms? What should people do? Where should they go? What are the opportunities? I mean, micro, sure, for where we are in the cycle now, but as well, any macro guidance, I think, would be very appreciated as well.
Right. So I think it depends on like what's your starting capital, and like I guess also like like how old you are, and like what's your risk tolerance. Like if you have no risk, like you don't want to take a lot of risk. You kind of just want to at least have kind of like the money you put in, like, and you don't mind it not going up significantly. Then just put in Bitcoin, Ether, farm with it or something like that, or do some like yield thing. There's a lot of ways to do that. You guys can look for it. But if you're looking for a high risk, which is like I get why like younger people go for high risk, because like say they have 10 grand they want to put in, and they're fine if they lose it because they can just like work at a job, get 60 grand a year, so they can make X6 their per portfolio in a year, which is completely fine if you're like 16, 17, 18. You just got like a part-time job, right? Like it's not like a career risk that you lose your portfolio, right? Like, but it's different for me. So like I can't just like go to a day job and work my current amount of wealth back. So I wouldn't have the balls to like still be in a lot of these, like especially like these more volatile like layer ones, or like which they move like 30% like every week. It's like just can't deal with it. So, but I like it kind of makes sense if you have like less sum that you try to like trade these trends, because like it's just like less of a career risk, and you can like always make it back. Like and like sorry, just on another point for when I was talking about like NFTs, like I mark down every NFT I buy as 0. So like because like I very much understand like, okay, this thing could just also be like a somewhat close to like a local top or like something like that, right? Like, okay, what if like next half year like just no one care about this thing like for a while? Like, so I kind of mark down everything I buy as 0 at the moment, and everything I hope too. So
yeah, I mean that makes sense. I think that's what I used to do with the altcoins that I bought, and I still do to an extent, at least for the investment side of things, right? When you just go into something super speculative and you're like, okay, I can stand losing this money, and then a lot of people are like, they can't, right? I still remember after the top in 17 when the altcoins went off and then crashed afterwards. People were all over the place being like, I lost more than I could afford, and this hit me real bad. That's something that everyone, I think, should be kind of aware of. Like, okay, can they really lose what they're putting in, or is it something that they wouldn't be able to stomach?
right.
But in general, do you think, like we've talked with a bunch of people, and pretty much everyone's been saying the most interesting space in crypto right now is DeFi, is kind of in that area. Do you agree with that, or do you think it's still okay, Bitcoin is the king and everyone should just be looking at Bitcoin first and then DeFi for like trade opportunities or whatever? Or what's your stance on that kind of whole ecosystem?
Yeah, I think DeFi is fine. Although, like, actually using it prices out, I would say a lot of like the newer, younger entries, because like they would enter with like say 10 grand. So I don't think it's optimal for them to pay $50 to do complex trading stuff or like some yield strategy on DeFi. And they can very much, I guess not replicate, but like they can at least replicate the base yields in DeFi and like on a centralized exchange too, just by selling futures and owning spots. So yeah, so like, but I know a lot of people are like now into like all this like initial like decentralized exchange offering or something like that. And like I have a friend who's like an expert in that, and like, he's telling me how like he literally like does this for a living, but like there's just one time he messed up where like his transaction didn't go through to like snipe the initial launch, but he's like, yeah, screw it, I'm gonna buy it anyways. But his buy order, which had like a large slippage allowance, like hit very late, so like he got in a very high price and still goes like X10. So it's like, yeah, like that space is like really heated right now. Like there's a lot of like people trading around there. So like if you have an edge on these things, like yeah, go for it. But like I think like you either find some edge and like just keep doing it, or like you kind of just try everything out and see what you like and stuff, or maybe work somewhere. Like if I know, like if you don't have like a ton of starting capital, yeah, like if I'm not mistaken, like I scroll through like some projects or like some stuff, and it's a lot of them are just hiring. They're on a hiring spree. So yeah, it's a good way to like get some experience from those two if you're new.
Yeah, I totally agree. It's actually one of my regrets from like early crypto, because when I started getting really interested, I was still in uni, but I had the risk management of, I guess, someone with like 3 kids and 2 mortgages, because I was just so scared to like lose all of my money, even though obviously the more important point, as we discussed, was the recoverability of those funds, right? And I wasn't even working a job at the time, so obviously your risk appetite should scale with how recoverable your funds are in kind of realistic terms. So that's something I very much appreciate. And I also really like the point you just made about trying stuff. I think Twitter is both great and terrible for this. I think it's great because you can almost get in touch with anyone, you know, devs, researchers, fund managers, traders, etc. I think especially at this point in the market cycle, most people are pretty reasonable, pretty open-minded, and will be willing to lend you an ear if you show at least evidence of caring, making an effort, etc., etc. But at the same time, this is something even I've struggled with. If you follow a diverse enough group of people, you'll feel like you're missing out pretty much every second of the day, right? Someone's just made like an amazing NFT play, then someone else has just, you know, made a great altcoin futures trade. Someone else just scalped Bitcoin at the same time. Another IDO came out and someone 10x. This is all happening at the same time, and maybe you've got like one of those things or none of those things. So there can definitely be some, you know, it can get pretty suffocating if you,
for sure,
if your Twitter feed sets up that illusion of everyone making it at the same time.
Oh, yeah, I remember that when like I wake up, urine had like some like 50% move, but it just recovers. At the same time, they had like this governance thing that like changed tokenomics. At the same time, Yam launched, and my friend has farmed 5 figures, and I'm not even farming it. And I'm just like, dude, like, what is this? Like, it's just so, yeah, it's just like so much going on. And I've kind of like, honestly at this point I've just given up like trying to keep up with all of this, because like, and there'd just be like projects like that's already like 120x, and like my friends already like semi-retired from it, and I just heard about it or something like that. Like, yeah.
That actually leads us to a nice point to round up. For where we are in the market cycle currently, and for those listening in the future, we're kind of, you know, it is the 9th of April 2021. We're in Coinbase IPO days. Do you have any sort of parting or final advice as to how to navigate this portion of the market cycle, where there aren't exactly red flags flashing. Things are generally going quite well across the market, both with Bitcoin, altcoins, and all these new emerging sectors, etc. Anyone listening, either now or maybe in the future, any final wisdom you'd like to impart, even in your semi-retired status?
I would just say, know the thing you're getting into, like, and like kind of like realizing, okay, how much percentage of this is like short-term capital or long-term capital, like say Bitcoin, right? Like, okay, like if every retail got liquidated, we would still be at pretty high prices, right? Because like this whole thing now is like been driven up by like there's a lot of like buyers that are just like boomer funds or like some sort of company or some sort of like high net worth individual, like, or ultra high net worth ones, like, and these people aren't like day trading, or they're not even looking at prices, maybe, right? So like a lot of Bitcoin price is now supported just by like that group buying and holding it. So I would say like for probably on Bitcoin, it's just like gonna be way less drawdown, like max drawdowns compared to like previous cycles, and maybe same could be applied to a certain extent on ETH, but on the smaller coins, I think these still have the potential to like really like lose most of their price, because there's just like not it's not like the same kind of participants yet on these smaller coins. So yeah, just something to like keep in mind, I guess, if you're like a long-term investor or something.
Yeah, makes a lot of sense. Almost categorizing your investments as to how long you expect them to stick around. And I think most reasonable people would agree that there's a difference between classifying Bitcoin and then classifying some punk ripoff you're buying on BSC or whatever it may be. That certainly makes a lot of sense. CL, you've been very generous with your time. I've certainly learned a lot. I'm sure our audience will as well. Thank you for that. And of course, a thank you to the show's sponsor, which is Blockfolio, blockfolio.com, blockfolio.trade, for your mobile trading needs. Duck, any final wisdom from the pond, comments, criticisms of our guest while he's still here, or anything for our audience?
I absolutely hate you. No. It's I really appreciate you coming by. I'm a little bit sad that you only came by when Cred asked you instead of when I did.
Yeah, that's some off-stream beef for you two to settle.
Yeah, but other than that, no, I appreciate you coming by, and would love to have you on again. Yeah, no wisdom from me, no news there.
Awesome. Thanks, CL.
Yeah.
Thank you to the Duck. To our audience, you know where to find us, and we'll see you for the next episode soon. Goodbye.
Yeah. Thank you. Goodbye.